This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. You're listening to Daily Market Wisdom with Master Trader Nick Santiago. I'm Kerry Lutz, and this is show number 14. Well, Nick, hey, time waits for no man. We're watching these markets move ahead, and well, what's the verdict here?
Well, today we had the weekly jobless claims number come in at around a little over 5 million. I think it was 5.25 million. So again, we're seeing more and more people displaced. They're out of work, and it seems to be the tone of the day. But I honestly, I'm looking at these markets today, and it's an options expiration trading week, and the markets are down a little bit as far as the Dow Jones Industrial Average and the S&P 500 go. But the Nasdaq is up, and I have a really, really hard time getting bearish when I start to see this kind of pattern that's developing on the spider chart, which is the S&P 500. So again, we're just going sideways. We're really just digesting the gains that we've had from March 23rd. So the March 23rd bottom, we've rallied up here into this past week, and really we're just going sideways, and that's a good thing. That's actually what you want to see if you want to see markets recover to go to higher price. So I actually like everything I'm seeing in the market right now. I'm very encouraged. The pattern is very, very good. The volume has gotten lighter. That's another telltale sign. If we go sideways and we go sideways on lighter volume, that's a positive for the markets as well. And right now I really don't see a lot of negatives, although the media is just as negative as I've ever seen them. So, it's setting up here for another buying opportunity.
Hey, Nick, what's that saying? That stocks climb on a wall of worry?
That's correct. If you don't have the wall of worry, you should start worrying.
Yeah, that's like if you're playing poker, high-stakes poker, and you look around and you can't figure out who the chump is, the sucker, it's you, right?
That's a very, very good analogy.
Yeah. And so earnings season, and we've had mostly financial stocks reporting.
Yeah, so this earnings season, we kick it off with J.P. Morgan. That happened on Tuesday. Yesterday, you had Bank of America. Today, we had Morgan Stanley. So just about all of the big companies have reported their earnings as far as the major behemoth financial companies. And again, none of them reported good news. All of the earnings so far where, we're down and we don't have any clear visibility going forward. But what I'm looking at, and I picked it up yesterday, I bought the XLF yesterday, and that's down a little bit today. It's down about 44 cents. This is a financial ETF. This is XLF is a Select Spider Fund. And I'm looking at the pattern on this thing, and it's really just a gradual pullback. And those are the patterns I like, because those are the patterns where you digested the gains that you've had on the upside, and then usually going to make another big advance to the upside. So I actually picked that up yesterday, the XLF, in my trading program. So again, I own that now, and we'll see how it does in the coming weeks as we go into more and more earnings announcements. But for the most part, the large financials have reported already. And again, they have no clear visibility. Some of them, like J.P. Morgan, were a little bit negative. And again, if you get this economy up and running, or you have any signs of that happening, I think you're going to start to see these things reverse very, very quickly to the upside.
And, the beauty is, look, if you ask 10 people on the street, when is the economy going to get restarted again? They'll probably say June 15th at the earliest. But you and I know from looking at the charts that, as usual, the consensus is going to be way off. And my theory is, and I might be right, I might be wrong, but after sitting in your house for a month, you had it. And you are going to, the second they announce a limited reopening of the economy, everyone goes back to work. They're not going to pay any attention because, look, I follow, I'm numbers too. I don't quite look at them the way you do because you have a whole different slant and goal what you're doing. But I look every day at the New York Times coronavirus map, not the map that shows where everyone's dying, because I look at it as like a pipeline. So this is a pipeline from 2 weeks ago, and we know that the numbers are being fudged, everything else. We know all this. And then I look at the map that shows the places where it's increasing the fastest. And this map has continued to fade to the point where when it's gray, it isn't even doubling anymore. It's like 6 cases. Here's one, Wyoming County in West Virginia. 1 case, low rate of change in reported cases. Yeah, you have 1 case. I mean, leave it to the New York Times to understate. And where it was bright orange 2 weeks ago, now it's this dull orange and with some hot spots in it, like there's one in Missouri, but Callaway County is orange, but there's 20 cases. So basically, in my mind, this thing is over. Yes, we're still dealing with the fallout, the aftermath of it, but it is over now. The pandemic, and the definition of a pandemic and epidemic is something that is an illness that spreads exponentially, increases exponentially. We're out of that, and now we're in the decline phase. It's just like a stock chart. It's like a bell curve, really.
Well, I agree. I actually bought some Bank of America call options today as well, so I'm in it to win it. And again, I just use the charts. I'm not even looking at the map. So,
but the charts
all in all,
the charts are predictive, right?
Yeah, you just look at the charts, and they'll tell you what you need to know. And the irony here is that Germany said they're opening up on Monday. So Here we go. Places are saying enough's enough. We're going to start up business again. And I hope we get it going here in the U.S. It doesn't necessarily have to be New York. Governor Cuomo could keep it closed all year long if he wants, but let's get some places going and let's get some business done.
Yeah, well, I think in Texas it's going to happen really fast. In Florida, in the South, Jersey, New York will be 2 to 3 weeks behind the rest of the country. But even New York, they've been shipping out the respirators. They don't need the ventilators. They've been shipping them out. And that is not the sign of a growing pandemic, is it?
No. And what happened to 40,000? I thought they needed 30, 40,000, right? Now it looks like, it was more like 400. Yeah. So, they're sending that stuff away. It's going to Michigan. It's going to other states. And here we are.
It's just lies, because they said they were going to be needing 110,000 beds. At the peak, I think it was 18,000. I'm not downplaying the seriousness of it. People actually did die, although we don't know how many, because they've been lying on the stats. Because as a healthcare professional told me yesterday, Nick, if you write on the death certificate COVID-19, the federal government picks up all the costs. And if the person is on Medicaid or Obamacare, then New York City and state split 50% of the cost. So here, you put COVID-19, the feds pick it all up. It saves New York thousands and thousands of dollars in reimbursements.
Yeah, I did see that, and believe it or not, it's going on all over. It's just unfortunate, but that's what happens when you have these kind of situations that just come out so quickly. But I'm in the camp that we're in store for some kind of recovery. I'm not saying markets are going to new highs anytime soon, but I think they're going higher from where they are now.
Yeah. So you bought BOA calls. Just to clue us in a little bit, give us a little hint.
Well, I just picked up some Bank of America. I picked up the 25 strike, and I gave myself all the way out till November. So that's basically I'm already in the money on on that position already. I was out of the money a few minutes ago. Now I'm in the money. But again, that you have to buy these things when nobody wants them, and yes. I know that's hard to really drill into people's heads. But when things look dire is when you have to be able to pull the trigger and step in. So often, I'll get into a position and I'll be down that day, and I'll get an email from a member and they'll say, why are you taking this position? And I'll say, well, what do you want me to do? Buy it when it's, at its all-time high? I'm buying it when it's depressed. for a gain. And the same thing, when I bet against a market or I short something, it's usually when it's at an all-time high or, going into a major resistance level, but, at a high point. And that's the psychology of this business. You have to train your brain to be able to step into something when nobody else wants it. And I always call it the Good Samaritan technique. So, if somebody just can't take it anymore, I'm going to take it off their hands and help them out. And if somebody loves a stock that's at an all-time high and I happen to own it, I'm going to sell it to them up there and help them out because they want it so badly. So that's how I look at it. And it's worked for, many, many years.
Yeah. Hey, well, it's good to do good and get the credit for it, earn the profit for it. So you're taking some unwanted garbage off of somebody's hands, and that's that, right? So
yeah, you just when people don't want something and they're panicking, I'm usually willing to help them out and take it off their hands.
Yeah, that's downright generous of you, Nick. So
it's a noble thing.
I love it. And so, looking ahead here, you mentioned Hilton. I figured as long as you brought that one up, we would keep following it. Where are we there?
Yeah, the chart's doing exactly what I'm looking for it to do. I'm probably going to enter that within the next couple of days. I also may do Hyatt, one or the other. So Hyatt has the same exact chart pattern, and they both look good. So I'm really tossing it up which one I want to do, Hilton or Hyatt. But, if you look at the chart, it's just sideways, sitting right below the 70 level. That's what we call a basing pattern. And when a stock makes that basing pattern, it's looking to build an army to push through the last resistance level, which in this case was around $75 to $78. So I love what it's doing. I love the setup on the chart. I will be getting into that. I'm not sure if I'll just own it outright, which I probably will do. I may look to buy call options in it as well or do one or the other. But, yeah, that pattern is really setting up. And I started to identify that over a week ago, and I said, whoa, this is going to be one that I have to keep on my watch list, and it's doing everything I've been looking for it to do. So far, so good. I have not entered that one yet, but I am looking to get involved in that name shortly.
Very cool. And let's see, there was a couple of others. Oh, one thing I'd like you to do is the spider chart for the exit point, which you had called probably back in November or December. If you could just send me a chart on that, and I will post it. So you show exactly where the exit point was and exactly what you said was going to happen, just to show people that your systems worked pretty flawlessly.
It was actually in January, and what I said back then, and I'll just reiterate now, and I'll send you a chart of it. I said when we get the first high volume sell-off day with over 100 million shares, that's going to be the signal that the market's ready to tip. And tip to the downside. And we got that on the 31st of January, and market proceeded higher up until around February 19th, and then that was it. Really, that was all she wrote.
Yeah, and that was it, all right. And we watched it happen with our very eyes. I remember you saying it. I remember watching it for quite a while, and there it went. And so. All the so-called market pundits here, Nick, are all saying that the market's headed lower, it's going to crash again, and everything your charts have said and are saying now, it's just it's not
the opposite,
right? Yeah.
So it's the opposite.
Yeah, so how could that be?
You could watch TV, or you could tune into the podcast.
Yeah, we'll see who's right, but generally the Baruch said it, and so many others that really the mass number of people and what they believe, what they expect, is almost always wrong in the long run.
Absolutely, and what's happening this year is that a lot of people are comparing this to 1929. This is not 1929. I know there are similarities whenever you have, markets like they were up in February, up at new all-time high. Plus, it's a 90-year cycle. I know I've started to hear more people talk about that, and I'm one of the few people over the years that have ever brought that to light. But we're 5 months removed from the 90-year cycle. So if you took the 1929 top 90 years later, add 5 months to it, then you get this February high that we just had. So a lot of people are looking at it like that as well. This year, at least in my opinion, so far, the 2020 year was a panic year, and it does echo a lot from 1929. It also echoes a lot from 1987, which is a 33-year cycle. So there are lots of cycles that are in play. Which one is the right one? Does it exactly produce the same results? Things along those lines. And again, 2020, before the year even started, I do a forecast and I put it out there for all of my members to watch and view, and I go over all the different charts, and I even outline and model my own chart for the year. And we've kind of just been really playing into that exact model so far. So right now the trains, as I like to say, are on the tracks, and we're going to follow the model. It's not going to be a straight up year, but I think there's still more to go. People don't realize this is an options expiration trading week in a shorter time period. A lot of game playing. Last week, the markets went up to a 50% retrace level. That's a level where, they're going to need to digest the gains if they're going to go higher, or we'll go back down. We haven't gone back down. I mean, we've had some pullbacks here, but I'm still a buyer of this market right now.
Yep, I'm kind of inclined to agree with you. Hey, looking at gold, it's up again today. It's taken back all its losses from yesterday. It's trading on the spot market around 1729. What are the futures saying there?
Yeah, so I'm showing gold at $17.53, up about $13 right now. It's just not backing off, and that's a good sign. What you don't want to see it do, though, is go up again. You want to just see this. So basically, if you take a look at the high pivot, which was made on the 14th of April, we're going sideways, and that's exactly what you want to see for higher price. So it needs to do more of it, maybe another week or two or three even. The longer, the better. But ultimately, we got helicopter money going on right now. I don't see why gold would really pull back all that much. So I love what it's doing. I love the pattern that it's making. I actually really like everything it's doing so far. I don't want to see it go higher because then it will come tumbling back down at some point. Right now, there's no problem with the pattern. It's really a pattern of strength at the moment.
Yeah, so it's a pattern of strength, and silver is kind of just holding its time there, huh?
Yeah, silver's trading right now on spot today, at 1573. It's had a great run. When I alerted you guys about the silver pattern, it was at 14 or just a hair below it. Now here we are at 1570, 1575 area, and again it's consolidating below its 50-day moving average. And when it does that, that's a pattern of strength too. This is telling me silver wants to go into the 17 level. So that chart looks good as well. It's just going to need more consolidation. That's how the ebb and flow works. You move up, you consolidate, you pause, you contract a little bit, you may retrace to a certain level or a prior breakout, then you resume the move up. And that's what we're seeing again in silver futures today.
Wow. It's so funny the way it works. And we're going to see that actual on the money spot. We're going to see that 1750 really soon. And that's when I think all hell breaks loose, Nick.
Well, that's going to be a big resistance level when you get to 17 and change. So when we get there, we watch the chart one more time and we let it tell us more. And then if it pops through there with any, with the right pattern in place, then we go to the next level. And the next level, as far as I could see, is going to be around 1870, 1880. So there's certainly more upside in the cards. But as I've been saying, you got to get to one level. You got to digest that level. Basically, that means consolidate it, and then you build a base, and then you work off that base to the next level. So it takes time to do these things. They don't happen overnight. Remember, there's buyers and sellers along the way, and there's believers and non-believers along the way. There's a lot of emotion that goes into this stuff. That's why we just try to clear up the noise, use the charts. Charts aren't perfect, but they're the best thing or the best method that I know of.
Yeah, I couldn't agree with you more. Based on what I've seen here, for sure. Uh, yeah, so the S&P, it really looks like it's going to go higher, and that'll take the Dow as well, and the other indices. They're all going to go up,
Yeah,
obviously.
and the one thing nobody's talking about is the Nasdaq. The Nasdaq is up 100 points today. So while the Dow is down 91 points, I call the Dow the suckers index, right? Because that's where the mom and pop comes home from work. They turn on the evening news, and that's where you talk about the Dow, right? The first thing the news will tell you 3 murders and a crime, and then they'll go into the Dow Jones, and they'll say the Dow
Yeah,
Jones today, rose higher by 400 points or was down 150 points. They'll talk about the Dow. They won't talk about the S&P. They'll talk maybe a bit about the Nasdaq, a touch, but really they're going to focus on the Dow, which is 30 blue chip companies that pay dividends. So,
hmm
I understand it, but again, it's only 30 stocks, and it's a price cap weighted index, meaning the highest price stock in the index carries the most weight.
mm,
Unlike the S&P and the Nasdaq Composite, which is the market cap weighted index, every stock there is weighted to its market cap, and I think that's a bit of a better barometer. So, yeah, I like the S&P right now, but the Nasdaq has been on fire. It's up another 1.2% today, and it looks like it's going to 8,800, maybe even 8,900.
wow, that much, huh? Amazing.
Yeah,
So
yeah.
Nasdaq futures, is that worth looking at?
Yeah, I mean, there's still more upside. The hard part about the Nasdaq right now is that it's had such a big run.
Right.
So for me, it's no longer cheap. I like to buy things when they're on sale. So when my wife and I go shopping at Costco,
hmm
I want to see the thing that is really at a really blockbuster price. That's how we make the bulk of our money. We buy
Yeah.
things when nobody wants them. You buy them when everybody hates
Everybody's
them,
down,
and
right?
they're low. Yeah, so I mean, but the Nasdaq is still pushing higher, and the pattern on the chart says it's still got more to go.
Wow, that's remarkable. So, well, I think you're going to be right on this one again. I think you pretty much were close to calling the high, and I think you pretty much called the low here. You've done this like this isn't your first rodeo here, Nick.
Oh no, I've been doing this for well over 20 years, and with a pretty high degree of accuracy. So, it's not easy. Sometimes you get it wrong. I'll be the first to admit it's a humbling business. But the good part about it is if you use charts, you know where you're wrong and you exit it, and then you just you wait for the next setup, and that's you just always putting the odds in your favor. That's all trading is. We're an odds maker. It's not. I want to be the house. I don't want to be the guy that's going out there on the roulette wheel or the blackjack table. 50-50 at best. I want to make sure I have 80% odds in my favor at all time, and that's pretty much my average. I bet about 85% winners, and 15% I'll lose on. So
All right.
it provides a good lifestyle for myself and my family, and again, we just do the best we can, but it's all about putting the odds in your favor, unlike a gambler, which is just somebody that wants to have action constantly. That's not who I am.
Yeah, yeah, and those people always lose. The guys that bet every game, that bet you know, every event, every sport, develop no expertise in any particular area. My good friend, I can't mention his name because he's a public figure, but he is the best gambler I've ever met, and he goes in waves. And usually, though, he's a winner. And his key is he doesn't look for any game where he looks for certain lines, as he calls them, broken lines, where he believes he has an advantage over the odds makers, where they have, for whatever reason, have called it wrong. And usually there's patterns, and he's been spot on for many years. So he's what I guess they would call an advantage better, and you have to have an advantage, which is why you need to go over to inthemoneystocks.com. Take a look at Nick's trading record. It's all there. Take a look at the training materials. They're free. And take a look at the latest offer. See what happens. It's really just, if you're going to follow advice, follow the advice of people who know what they're doing and who are making money in good markets and bad. To go to those pundits, Nick, those so-called pundits, and take their advice, it's a surefire way to bankruptcy.
Well, I mean, that's just unfortunately what happens. People just they're screaming for help. They're screaming for some type of guidance, and they want some hand holding, and that's where we come to. But in my program every night, I don't do a million positions. I just take the best positions that I can find. I go over them every night with all of our traders. Tonight, in fact, I'm going to hold a live conference with everybody. They get to come in, ask me questions. We keep the conference open till we exhaust all questions. So sometimes they're 30 minutes long, sometimes they're an hour, sometimes even a little longer. But that's just what I do for all of my members. And again, we've had a great year. Our options are up tremendous. I don't even want to give the numbers out because they're ridiculous.
Not credible,
huh? yeah, and then our swing trading. I mean, we just we're just so steady in there. I mean, we've taken one loser since September. So I mean, it's been an incredible run, and we just try to do the best we can, and I try to provide the best knowledge that I have, which is pretty vast. And again, people that want to learn it, it's all up there on our website. If they want to learn it, the cost is not expensive. I see people want to become doctors. They spend $200,000 on a college tuition, and have student loans for the rest of their life. Here, for you can learn it and practice it for practically nothing.
Yep, and it'll be with you for a lifetime, because it's like riding a bike. And once you learn to recognize those chart patterns, you look at the market totally differently than probably I do at this point in my life, for sure. So I'm about to take the course myself, and I highly recommend that you do. Any questions or comments for the Master Trader Nick, just email me, kl@kerrylutz.com. That's kl@kerrylutz.com. Maybe we'll do a webinar one of these days, Nick, and really lay it out there for everybody. And we could do it maybe Facebook Live or YouTube Live, and just to get a whole bunch of people on there so that you give them some examples and see how it works, how hard it is to learn, and how hard it is or how easy it can be to succeed.
Yeah, I mean, it's just a matter of patience and dedication, and with that, anybody can succeed at anything. I mean, that's what life's about. It's not about going out there and just winging it or hoping. That stuff, we'll leave it for church. But for here, if you want to make a career out of the trading business, it takes a lot of work, takes a lot of involvement, and you got to get yourself a little bit educated. You can't just go out there and just. So often I see people say, "Hey, I got to get into that trading thing." Like there's nothing behind it, but it's a lot of work. It's definitely a passion of mine, and anything that anybody's passionate about, they can accomplish.
Heartily agree, wholeheartedly. So inthemoneystocks.com, send us an email, kl@kerrylutz.com. Nick, we will catch up with you tomorrow, and we'll recap the week and see what's ahead.
Thank you, Kerry.
This is your dose of daily market wisdom with Master Trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.